Johnson & Johnson, the pharmaceutical giant, has been raising their dividend every single year for the past 61 consecutive years. But does that mean Johnson & Johnson has earned a spot in your dividend portfolio? In this video, we're going to talk about everything you need to know about: an overview of the stock, current news for Johnson & Johnson, options data, dividend safety, and historical results against the S&P 500. Everything you need to know, and it starts right now. What's up, you guys? Welcome back to the Average Joe Investor channel. By the way, my name is Joe. I still seem to get that question quite a bit. We're kicking off a new series here where we're just going to start looking at individual dividend stocks and all of the important metrics you need to be aware of as a dividend investor to make an informed decision. Every stock review we do, and we're going to do a lot of them, is going to have its own spreadsheet available to every member of the Average Joe Investor Patreon community. If you want to learn more about all of the value you get from being a part of the community, including access to my spreadsheets, access to all of the trades I make in my own portfolio, and most importantly, access to the Discord community, check out the link down in the description below. All right, let's dive in here. Johnson & Johnson, member of the healthcare sector of the economy, specifically the pharmaceuticals industry. Like I said before, 61 consecutive years of dividend increases, making them a dividend king. They are a good value right now, very close to their 52-week low at $147.25 a share. The revenue looks great, 16.26% over the 1 year for the growth, 6.86% over the 3 years, and 3.92% over the 5 years. Very stable dividend growth, 6% year over year over the past 1, 3, 5, and 10 years. Current yield, 3.2%. against a historical 5-year average yield of 2.75%, which is a 15% discount. Also, they have a weekly options chain. We'll talk more about that in just a second. Here's a brief overview of their price performance over the year to date. We're going to look further. We're going to look at the 5-year as well, but you can see that J&J hasn't done well from a price standpoint year to date. Here's a breakdown of their sales by segment here. They essentially operate 3 different segments. They have consumer health, pharmaceutical, and medical technology, or med tech. And you can see the majority of their income is derived. About 2/3 of it here is from the pharmaceutical segment of their business. Second is medical technology, and third is consumer health. And about half of their income is derived here in the United States, another 25% from Europe, 25% here we'll say with Asia Pacific and the Western Hemisphere, excluding the United States. Here's a breakdown of their major pharmaceutical therapeutic area sales. You can see that the majority of their income is coming from their immunology business, primarily Stelara. Another big segment here within pharmaceutical is right here, oncology, with Darzalex. Now, I did some research here with respect to the news about Johnson & Johnson out there, doing some Google searches, what are the big things on investors' minds? And really the only negative news that's weighing on J&J just a little bit here is some of their litigation, primarily litigation with potential cancer and asbestos. I've got the links here in this articles, both from Reuters here. The most recent news is from November of this year, where after trying to take some of this to bankruptcy, they did settle the first of a few different cases involving cancer. Additionally, back in October, they had a court case where they had a verdict against them get tossed out by their appeals court. Now, this is relatively recent news. However, going back to this other tab here in stock overview, I did note here, based on their annual report, if you look at some of their large expenses here, litigation was significant in 2021. They spent $2.3 billion in litigation expenses, but in 2022, it's only $0.9 billion. Still a lot of money, for sure, but a lot less than the previous year. Now, you know that I love talking about options on this channel, specifically covered calls and cash secured puts to an extent. We're going to look at some options here for Johnson & Johnson at the option chain and some opportunities to sell covered calls here. Every investor has a little bit of a different strategy and is trying to accomplish something different here. And you can certainly be more conservative, less conservative, depending on what you're trying to accomplish. But here are just 3 different opportunities to sell covered calls on Johnson & Johnson. Here we've got a weekly opportunity here, or 9 days in this case. We've got 16 days, or approximately 2 weeks. And then we also have a 30-day option for those that would prefer to sell monthly options. Now, this 30-day option right here is working with a 37 delta here. By the way, this dividend capture calculator is available as part of the Patreon community as well. So this is a 37 delta, and current price 152, and we were looking at a 155 strike. So for a 30-day option here, if you got assigned at the end of 30 days for holding Johnson & Johnson, your return on capital would be 2.89%, which would be an annualized yield of 35% if you did this month over month and were assigned on that monthly basis. Moving up here to a bi-weekly opportunity, we looked at approximately a 32 delta right here. Current price 152 compared to a strike price of 155. That's the 32 delta. And in this situation, with a holding period of 16 days, the option premium would be 96 versus capital appreciation of 289. The total return on capital there would be 2.53% for the 16 days and 57% annualized. And then the third option here, we don't have a ton of opportunities with respect to volume and liquidity because we have large gaps in the strike price differences here. We looked at a 25 delta, about a 26 delta here. Same idea, 155 strike against a 152 current price if you were to buy it today. Holding period here would be 9 days. Total cash flow in this trade would be $346, which would be good for 59% or 2.27% return on capital during those 9 days. Again, this is a little bit more of an aggressive strategy, you could say. And if you liked holding Johnson & Johnson long term, you could go further out on that delta to reduce the likelihood of assignment. Just some opportunities here to look at. Now, we're all about dividend safety here. We want to pick dividend stocks that we think it's low likelihood that they have their dividend cut. Here's a screenshot from Seeking Alpha, and then we'll look at my spreadsheet here. You'll notice here that their cash dividend payout ratio for the trailing 12 months is 75%, but if you look at, this is the standard calculation here based on GAAP measures, the net income, 34%. And we've got a cash flow payout ratio of 56%. And generally, I like to look at a safe dividend stock being somewhere in the range of, low, like 10%, up to maybe a maximum of 50, 60, maybe 70%, depending on how long they've been paying dividends. So a little bit more leniency with the stock like Johnson & Johnson. If we go down to the spreadsheet, this is part of my monthly dividend stock spreadsheet, an excerpt here for Johnson & Johnson. You'll notice here that their payout ratio based on free cash flow, or in other words, the money left over after they paid all their expenses and made all the necessary investments back into capital structure and other elements of the business, 78% here, which is a little bit high. However, with a 61-year dividend stock, it's not as big of a deal. Their previous year, that was trailing 12 months, previous year was 71%. And one thing I want to call out here, and this is what you expect with large businesses that are very stable, Johnson & Johnson is very stable free cash flow. Year over year, 6.09 per share, 675, 853, 695, 742. Whereas other stocks here have large swings in free cash flow. Like you can see here, we have a large drop. Here we have negative cash flow month over month, and it's definitely possible to have a lot of variation here. But we have very stable free cash flow with Johnson & Johnson. From a dividend safety standpoint, I think that's a very low likelihood that you would experience a dividend cut with Johnson & Johnson unless something materially changes in the business. So what I did with respect to the historical results is we looked at Johnson & Johnson's year-to-date versus the S&P 500, and then Johnson & Johnson for the past 5 years compared to the S&P 500. The assumption here we're looking at is a lump sum investment of $10,000 at the beginning of the period, reinvesting all dividends to see which investment has performed the best. So let's take a look first off here. This is the year-to-date performance S&P 500 or SPY versus Johnson & Johnson, J&J. So orange is the S&P 500. Blue is Johnson & Johnson. You can see that the S&P 500 has outperformed Johnson & Johnson year to date. Total returns all in. To be clear, Johnson & Johnson has lost money year to date. They're worth $87.93, whereas the S&P 500 is positive. If we go down here to the 5-year return or the 5-year performance, S&P 500 wins here again. Starting with $10,000, the S&P 500 is now worth what here? $18,000, nearly doubled its money in 5 years. Whereas Johnson & Johnson has gone from $10,000 to just under $12,000. So a significant outperformance by the S&P 500. I mean, this is just a year-to-date and a 5-year look back here. Very well could be that Johnson & Johnson has outperformed, especially when you factor in dividend reinvestment and that dividend snowball over a longer period of time, 10, 15, 20, 25 years. Didn't go back that far for this review, just something to keep in mind. Overall here, pros and cons here. The fact is with Johnson & Johnson, you have a very stable dividend stock, one that you can feel very confident you're not going to experience a dividend cut. You do have the ability to sell options on the stock with a weekly option expiration, and the stock is very stable. You definitely get more yield with Johnson & Johnson, but the overall performance is still stronger with the S&P 500, and if you factor in covered calls and the ability to use options, you're going to be able to do so better with the S&P 500. There's a lot more volume, liquidity there, and implied volatility. Hopefully you found some value in this video, guys. Make sure to leave your 2 cents down in the comments below. Do you own Johnson & Johnson? Do you own the S&P 500? What are your thoughts moving forward about Johnson & Johnson as a viable business, as a dividend stock, as a dividend safe? Want to hear it from all of you guys. Make sure to leave your 2 cents down in the comments below. It's my goal to respond to as many of those comments as possible on the day I post a new video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.